Thanks for joining us. My name is Ibrahim Sani. We continue our coverage on Budget 2023 or Belanjawan 2023 Malaysia Madani. We're looking at some of the tax initiatives and incentives, particularly those that impact you personally. How does the tax increase or decrease impact your wallet? Is this really a good thing moving forward? And most importantly, how are you going to chart your way when it comes to trying to get the best out of the tax code that we have right now? Joining us online is Dr. Virendrajit Singh, the chairman of Tricor Malaysia. He's also the vice chair of ICC's Global Tax Commission. Dr. Virendra, thanks again for taking the time to speak with us. In a note that you shared with us right after the budget, you were talking about the widening of the tax base being the clear initiative in this budget. And if you look at the forest and not the trees, you're looking at how the government is intensifying its efforts in trying to improve on tax collection without the introduction of the GST. However, in that same note that you gave us, you did argue that this does pave the way for a possibility of the return of the GST in the near to mid-term horizon. Where do you see this government when it comes to the tax code of the country following this budget announcement? Do you think that this is a good budget or a poor budget?
Overall, thank you, Ibrahim. First of all, thank you for inviting me. First of all, I think overall, this was quite a comprehensive and all-purpose budget. Obviously, a budget is just a one-year plan. So what sometimes we hope to see in the budgets for a particular year was some kind of announcement which will carry through in the future. And I think this thing about revamping or widening the tax base has been talked about for many years, but we have not seen any dynamic suggestions or initiatives. So I think this budget to me stands out because some new taxes have been proposed, not something that is wide-ranging, but something that sets the base and foundation, and then in future, they could well become a much wider tax, whether it's called luxury goods tax or whether it's a limited form of capital gains tax. This all sends us some message that there is a revamp in progress. What is unfortunate, of course, is that I think the Ministry of Finance or the Minister doesn't share with you a roadmap. Like 5 years from now, what are we looking at introducing? And that could be either it's good for us looking in, but it could be not so good for the government of the day because they may then have situations where they may change their minds, and therefore it may not look good when civil society says, you said this, you made some comments, and then you don't introduce this. But nevertheless, for transparency, I believe a roadmap in terms of what they're looking at may be good. But remember, the core of all this is economic growth. If you do not have the kind of economic growth that is needed to generate tax revenue, then all kinds of revamp that you may look at in introducing in the tax, particular in the tax area, will not work because then there is nothing more that you can tax. And if you overtax society, it creates other issues. So I think the budget looked at a number of things, which is really helping the people in need. And that's crucial. Looking at trying to reduce a fiscal deficit over time, very important. And then the issue is looking at investment. That's crucial because you need growth. And the growth will come only with reinvestment and new investment. So in that sense, it starts the ball rolling. And this also makes us quite confident that perhaps in the 2024 budget later this year, you'll see further details in terms of some of the initiatives that may have been mentioned yesterday, or rather in this 2023 budget, but it will eventually be carved out in greater detail and you'll see more initiatives. So in that sense, overall, it sends a good message, but it also makes investors a little bit concerned because the new taxes come in. There's always a little bit of uproar, hoo-ha about it. But I think we need to take it one step at a time. And I think it's very, very notable of the Minister and the Ministry of Finance to actually take some bold steps by announcing some of the initiatives.
Let's talk about some of the initiatives per se. The increase and decrease of personal income tax to some. First of all, there is this whole confusion of percentage points versus percentage. 2% percentage points is actually, quite huge. Quite small compared to a 2% percentage points. But that being aside, do you feel that this whole idea of targeting the rich more precisely and alleviating the M40s in particular is being obviously seen from this revamp of the personal income tax rate changes found in the budget 2023?
Yeah. Obviously, the challenge here is that personal income taxes do contribute to the nation's coffers, right? But not as much as developed nations. In developed nations, personal income taxes are a huge portion of total tax revenue. In Malaysia, corporate income taxes are the significant portion. So that is because of our structure of society. And as you also know, 15% of the workforce actually pay income tax. The rest do not. So because of the low wage structure we have. Now, so if you're looking at some form of message to try to say, we'll try to set up a more progressive personal income tax structure, the only way to fiddle with that is the tax rates, right? And so what we used to see in Malaysia was that the bands that we have seen as you move up from the 10,000, another 20,000, you earn 30,000, we were moving up the bands faster. And over the past years, you find that there have been some revamp and we are widening the barrier, the base. For example, 75,000 to 100,000. It's only 25,000 gap, right? So the issue here is about widening it, making it larger so that we do not impact on the individual. But it's easier said than done because when you make these adjustments, there are losses in terms of tax revenue. So I think here what has happened is you are basically taxing the rich to help the poor, which is fundamentally what taxation is all about. Personal income tax is all about capacity to pay. So I think in a sense, we are seeing uptake in terms of the personal income tax rates for the rich, the higher end of the spectrum, paying a little bit more. But remember, our top highest personal income tax rate didn't increase. The increase is only in somewhere towards the 28%, 26%. So it's not like we've increased the maximum of 30% or whatever, it's gone higher. But we have sort of engineered a little bit of reshuffle. So I think that's what has happened. And also remember one thing, I think the government is sensitive and any government is sensitive for the M40 as well, because M40 has always been saying they've been left out. So a little bit here and there is being done. So yes, it is re-engineering. But it does look like a little bit is being given away and a little bit is being collected from the wealthy. Again, I want to point out the fact that we are not the only nation that is seeing a need to increase the personal income tax rates on the wealthy. Singapore has also been increasing this slightly over the past few years. And we also saw this in the UK budget as well. And those are all reactions to the pandemic in some ways, in trying to build up a little bit of reserves. But in Malaysia, we tend to also be a little bit sympathetic by giving away more to the bottom end and then taking from the top end. Now, is this a sign that we will see more being done to tax the rich? Not necessarily. I think it's a sign to say that we're trying to make our personal income tax a little bit more progressive by moving the bands wider. And of course, there could be an appropriate tax rate of 28 or 26. But I also want to put this point across that if ever we eventually introduce a comprehensive consumption tax, like the GST that we all have been hearing about in the past and even now, then you could see a situation that if the consumption tax is structured properly and not like what it was when we introduced it earlier, you may find that it will generate sufficient revenue which will allow personal income tax rates to come down a little bit. That's something we think will happen, but not so fast. We have to see how the economy moves, how the wage structure moves, and how the investment inflows are moving along. So those are the things we need to consider. So I think we are seeing a small readjustment, and it may be a sign that that we are trying to raise a little bit and give a little bit, but it doesn't point out to a substantial change in the future on personal income tax rates as yet. I think we'll see more changes in the other types of taxes.
Fantastic. We'll go for one short break. When we come back, we'll discuss a bit more with Tricom Malaysia Chairman, Dr. Vrindajit Singh. Thanks for staying on with us. I have with me on the line Dr. Vrindajit Singh, the chairman of TriCor, is also the vice chair of the ICC's Business Chamber of Commerce. Let's talk a little bit more about this whole notion of new taxes that might be on the horizon and might not necessarily be GST. What are you looking at? What areas of possibility do you think that the government might introduce in the budget 2024, which not many people realize this. It's just another 7 months to go for the new budget to be announced.
Yes. So that's why this year we
blessed with budgets, doctor. That's what we're doing.
We should not be overly concerned with the 2023 budget. We should be looking more at the 2024 budget. But I think what will happen, remember, the two new taxes that were mentioned here were the luxury goods tax, which I believe will be similar to a sales tax, right? So it will probably be under the Customs Department, but no details have been forthcoming. But I think that's the only way to do it. Now, a luxury goods tax is also there in the VAT systems around the world. For example, Indonesia, you have a higher VAT on luxury goods, a lower VAT on others. So things like that, right? So it's a tax based on the transaction, right? Whatever you bring. So that is, I think, another way you are taxing the rich, again, based on the capacity to pay. Because if you can afford to buy luxury goods, Birkin handbags or whatever, then you should be able to pay a little bit of tax, right? So I think that concept, I don't think anyone will grumble with. The other one that was mentioned was a capital gains tax on the sale of gains that you make on the sale of shares in unlisted companies. Now, so we are beginning to see the potentially in the near future, we are beginning to see the foundation of a capital gains tax being set. Remember, we do have existing capital gains tax, we call it RPGT, or real property gains tax. Now that is very limited in scope, only on real property and shares in real property companies. It's a possibility that if we do, remember, the point made by the minister was not that they are announcing it, not that they're introducing it, they are going to study it. So I get a little bit concerned when we say study, because I think some discussions have already been made. And I think I'm aware that a few years back, the Tax Reform Committee may have submitted some proposals as well. So this is something that may have come out from that. So I think the discussion will have to be with relevant stakeholders. The question is, who are the relevant stakeholders here? It's everyone in the business community. So let's see how that goes. Now, if you have a discussion with stakeholders, what do you think stakeholders will tell you? Nobody likes a tax. So I hope the government will consider carefully how they go about this. I'm also hearing some rumors that that authorities may be going on a study tour of other countries which have a CGT like this, capital gains tax, which I hope doesn't work, doesn't happen, because we're wasting money. And nowadays, you know what it is. Government to government, you can actually find out more information how this is done. Now, the other thing about this CGT is that it is only on the gains that you make, and the minister did say it will be a low rate. So I'm speculating that if at all, it could be a 5 or 10% tax rate. Then the next question will be, and this is unclear, how will it be collected? Where will it be? Will it be a new legislation, or will it be included in the income tax legislation? Now, I have been mentioning things like this in the past in various media appearances, that you must realize that in the old days, we always thought capital gains are sacrosanct. It is all tax-free, cannot touch it. And trading gains, profits are the ones you tax. And that, unfortunately, was the old theory. That this theory has now been debunked. And you find that countries around the world, especially in developed countries, more or less, you intend to tax both profits, income gains, as well as capital gains. You may do it within the income tax structure and call it something else, or you may do it by way of two separate tax legislations, income tax, capital gains. So I think some commentators might say this is new for Malaysia. It's not new. We've got a real property gains tax, right? So question here is, this is a transaction-based tax, because when you make a gain on the sale of shares, mind you, it's only make a gain, right? And I think it's fair. For example, recently we saw some news about a dairy company buying over an ice cream business, 84 million. Now, what's 5% or 10% of the gain? The gain would have been very substantial, by the way. So nothing wrong with that, I think. And the issue sometimes is people will say, "Oh, Malaysia becomes highly taxed." But I think we need to be very careful. The government needs to be very careful that this particular introduction of a capital gains tax on only the sale of shares in listed companies is not widened in coverage too fast. All right, because a full-blown capital gains tax is only relevant when you are a developed nation and you are looking at all the attributes of a developed nation there being there. We don't have all that yet, but ultimately, as we move up the high income level, our GDP goes up, per capita goes up, then we can seriously consider a full-blown capital gains tax. So it's very, very heartening that the minister is only talking about shares in unlisted corporations. And you know very well that is shares of listed companies, the stock exchange will be affected. We invest in shares, we will be affected as well. We make a gain. That becomes more problematic. My last point on this is on the CGT, is that some will say, I also pay stamp duty when you sell, right? And but the acquirer is the one who pays stamp duty on any acquisition of shares. In this case, it is a tax on the gain made by the seller. So there are two different components of it. So any investor will come in with eyes open and know about this. But if the value is there and you're making it's a good value, if the tax is low enough, then I'm not too concerned. But I also would speculate that this tax could well be placed under the Income Tax Act. And so next question is how? Income tax, by the way, we have a maximum corporate rate of 24%. I think you know that, Ibrahim. And you could add in another component to say capital gains on this item, but tax at, let's say, 5%. And it could still be in your tax return of the company or even individual. If an individual, you pay personal tax rates, but if the CGT is 5%, you report it in your tax return and it'll be calculated separately and call that. That can be one of the ways we do it, because we also are mindful that we do not want to create too much of compliance issues, right? Too many new forms will create issues. So simplicity is the key to all this. So those are my thoughts on the CGT aspect. So I think we are looking at, and the last point really is this. The finance minister did not dismiss GST, right? And that was a sensible thing to do, because logically, I hope that the parties concerned, political parties, do appreciate that there are value and benefits in the GST. It's just that you need to handle this very carefully, and you need to make sure you don't have too many exemptions, and you need to make sure there's good education, and you need to make sure that refunds are really given on time, because this is a failing that we had in our GST, and that resulted in traders simply increasing their prices and not factoring in that they will get refunds, not factoring in that they'll get an input credit, just treated it as if it's just an add-on. And that's what led to spiraling of our prices and poor enforcement by all ministries concerned. I've spoken quite a bit. Ibrahim, your follow-up question, if you have.
No, it's okay. It's okay. But final comment, Dr. Verinder, do you feel that this is a little bit more optimistic when it comes to the budget? A very short one because we don't have much time left. Or do you feel that this is the same old budget that we've seen of recent years?
I find that this particular budget was refreshing in its positioning in terms of focusing on the people, and there are so many aspects covered: ESG, digital, women, children, and so on. But sometimes when you try to cover everything, there are no specific measures announced, but more broad-based comments. So I think, and also I am enlightened by and heartened by the fact that there is now a little bit more clarity on where the tax structure is moving in terms of some of the suggestions made. And this tells us that the ministry is open to revamping and not holding back for fear of the unknown. So to me, I think it's very broad-ranged and a good budget considering the circumstances we are in. And the commitment to reduce the fiscal deficit, and I think eventually we should be targeting a balanced budget in 4 to 5 years. That should be the way to go, because to us at the end of the day, it's not simply a situation of saying we can do anything we want. We need to manage our fiscal deficit. We need to manage our debt service capacity and so on. So overall, a good budget, but a little short on the details. And we hope the details will be forthcoming. But I dare speculate that a lot of the details will come out in the 2024 budget, including CGT. Yeah.
Well, it's important to note that the deficit has been reduced from 5.5% to 5% under the new budget. Of course, further clarity is going to be given in the months ahead, particularly leading up to Budget 2024, because the statement that was given by the Finance Minister, Dr. Ibrahim, is that fiscal deficit reduction is going to be a core element in the presentation of future budgets. That was our conversation with the Chairman of Tracom Malaysia as well as the Vice Chair of ICC's Global Tax Commission, Dr. Verinderjit Singh. Again, thank you very much, Dr. Verinder, for coming on the show. Continue to stay with us on Astro Awani as we continue to provide the latest and most important updates regarding not just the budget 2023, but many other matters regarding Malaysia's economy and global outlook for the country as well. For now, my name is Ibrahim Sani. Catch you in the next one.